Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a number of lenders that have increased their mortgage rates this week. What that means for people that are looking for mortgages or buying a property at the moment, and what can you do to protect yourself so you don't get caught with a higher rate while rates are going up. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. We're on the way to 43,000 subscribers and you'll get all the latest property news, house price news, interest rate news and property investing news by doing that. And let's get some more views on this video by smashing like, tickling like, doing something to the like button. That helps with the YouTube algorithm and that really helps the channel grow. So thanks to everyone that does that. So, what's going on? Well, last few months we've been talking about rates coming down. So many lenders cut rates. In fact, a few are still under that magical 4%, but we got some bad inflation data. And the expectation is that inflation is going to continue to rise in the UK this year. And it's really frustrating because a lot of this increase in inflation is not down to you or I. A lot of it is down to government policy. A lot of it is on energy. A lot of it is being due to wage increases. And they happened due to the increase in national insurance. It also happened because of services costing more money. So we're talking about service-based businesses putting their prices up. Restaurants, hair salons, solicitors, and such like. And that happened because business rates also went up. Everything was getting more expensive and none of it really was in our control. So because of that, the Bank of England didn't look at cutting rates or they're not looking at cutting rates in the next meeting. And so inflation went from 2.5% to 3.6%. And that means the Bank of England is going to be much slower at cutting rates. That means that the rate that the banks that we borrow at, when I say you and me, I'm talking about NatWest, Santander, these sorts of banks, they borrow on something called the Sonia Swap rate. And the Sonia Swap rate has gone up substantially in the last few weeks, around 1%. Now, that means that lenders are likely to start passing these increases on to people like us. And lenders have already started doing that. So here's some lenders that are putting their rates up this week and by how much. First is Halifax. So Halifax is obviously a major lender and they have various different sub-brands that they lend under as well. And they're looking to put their rates up this week by 0.16%. So not far off 0.25%. And a lot of these lenders are creeping these up on a quite frequent basis at the moment. There's a buy-to-let lender that's quite large called Accord. They are also increasing their rates and they're going up by 0.15%. Not great. And so you're going to see a lot of lenders doing this. And we've also got Santander have increased their rates as well. Not as much as the other guys, but they are increasing rates. So Santander has gone up by 0.1%. And you're going to see more of this week. I'm pretty confident that other lenders are going to increase their rates now. When they see their competitors do it, it's easy for them to do it and get away with it. So what can you do if you're looking to refinance or remortgage at the moment? Well, the first thing that I would do is speak to a mortgage broker as soon as possible. Get that conversation started because you can fix your rate with a lot of lenders up to 6 months early. And so that's something that you should start looking at. So for a lot of people, that means anyone that's got a remortgage pretty much this year should start this process right now. So you could go to a lender right now and you can get the application done and you can get a mortgage in principle and that will be valid for that 6 month period of time. And you've got the time to get it worked through and get that done. And so maybe you can fix a rate today. Let's just say you fixed a rate of around 4.5%. That's not too great, but it's significantly better than they were last year. And that could be a good rate in a few months. So let's just say you get this 4.5% agreed with NatWest, and your new mortgage, this deal doesn't start until December. And during that time, between now and December, the economy goes into contraction. We go into a recession. Unemployment rises, inflation starts to drop significantly, and then the Bank of England turn around and say, you know what, we're going to start cutting rates again. That's a positive sign, but you've signed up for this 4.5% deal. Well, as long as that deal hasn't started, you can swap onto that better rate. So let's just say the new rates drop all the way down to 3.5%, then you just swap onto that rate. Most lenders will let you do this. There could be a small admin fee, but it would definitely be worth paying that in order to get that much lower rate. Now, what this does by fixing early is it gives you the worst case scenario. That's what you want to get in this uncertain market. Every video that I do, people are commenting saying, one day you say house prices are up, the next you say they're down, then you say asking prices are up, then you say you're down, then you say mortgages are up, and then you say they're down. That's true, and that is what's happening in the market. All of this can be true. You can have rates going up, you can have rates going down with other lenders. It's an uncertain market. That's the main point here. So let's just say rates in this period of time went up to 5.5%. You don't start your deal till December. Do you need to worry about that rate going up to 5.5%? The answer is no. And so you're locked in at this as your worst case scenario. But in the meantime, if rates do drop, you've got that option to move on to that better rate. That's what the smart people are doing at the moment. In fact, I've had multiple people stop me over the last month and say they've been doing exactly that. You've been watching the content on the channel to keep an update on what's going on with interest rates, and that's made you make the decision to get that rate locked in. That's the smart thing to do. Another thing that could happen is you might apply with a lender and think that everything's great, but they might get a little bit stricter. And if that happens, you might not get a deal with the original lender that you were planning to go with, and then you need the time to go and find another lender. That's important as well. Some deals can take significant amount of time. Maybe the valuation that you get back doesn't match up to what you need or what you feel it's worth, and that means that you're going to go out and look for a second lender and get another opinion on that. So look, rates, they're going back up. I think you're going to see a lot more of these lenders increasing rates over the next few weeks and months while the Sonia Swap rate is high. The way that this could change drastically is if that inflation suddenly gets a lot better than expected. But unfairly, a lot of this inflation is not in our control. It's not down to us. It's down to the government policy, and they're not really doing much to decrease any of this inflation, in my opinion. Let me know your thoughts, questions and opinions below. Have you fixed a rate already, or what's your plans with your mortgage rate? Are you going to hold out, or are you considering a tracker rate? Because a lot of people are looking at those as well. Make sure you smash like on the video, and do check out all the other content as well on the channel, including this video right here.